Bitcoin and cryptocurrencies have had a very active, busy week. So, what can we look for from Bitcoin? Are we in a bear trap? Are we in a bull trap? What's going on? Bull trap, bear trap? What is up with the crypto markets? So, let's take a look at a couple of things. Not only just a quick look at the charts and some key levels that we need to be watching for in the next week. Upcoming, but also some information and guidance on the new legislation that was just passed that everybody is concerned with. So let's go ahead and share the screen. I talked a little bit about the regulatory environment last week and in terms of what we're looking for and what we need to get broader institutional adoption is regulatory guidance, tax guidance. The institutions need to know what's going to be expected, what they're going to be looking at, and how they need to treat these assets. So this is an hourly chart of Bitcoin here over the last few hours, and really interesting price action. There's Bitcoin, there's Ethereum, basically identical. Bitcoin and Ethereum has pretty much almost the identical price action going on here over the last few hours. So let's zoom out a little bit more and let's look at the last few days and see what's going on here. There's Ethereum, there's Bitcoin, looks almost identical. You can look at some of the other large cap alts and you can see some similar price action now. ADA, Cardano, has been straight uphill pretty much over the last week or so in anticipation of the announcement that Charles made Friday on Crypto Banter, and in terms of smart contracts coming in September. So we had some good price action last week. Remember, buy on the rumor, sell on the news. That's kind of what we had here. But Cardano could be potentially looking for some more upside here, depending on the broad market and the broader market and what's going on. There's Matic. I've been tracking a few of these because the price action has been pretty interesting and very similar across a lot of these assets. Some of them are all over the map, but there are a few. Solana is making a little run today. Don't know what's going on there. It's really interesting. But in terms of the overall market, you can track this price action, especially when you start looking at the daily and looking at the last couple of months on the daily. Here's Bitcoin basically straight up with a couple of little pullbacks. And again, what do you want to see for a trend reversal? You want to see higher lows and you want to see higher highs put in. So far, we've been putting in a higher low. We want to see this turn into a higher low here and potentially another higher low here if it reverses, and we're looking for trend reversal. So now that key level that everybody's talking about and looking for is that $50,000 level. So if Bitcoin can get above 50,000, a lot of resistance there. If Bitcoin can get above that 50,000 level, break it and then close above it, then you can expect a complete trend reversal and back towards this all-time high of 65,000. And when is it bull market on and no more traps to worry about is when you get above 65,000. So you have to be looking for those little reversals and those dips everywhere along the way. But that's just kind of how it works, right? So whether it's a bull trap or just a dip, that's kind of how uptrending markets work. Higher highs, higher lows. It just kind of spikes and drops, spikes, drops, spikes, pulls back. So that's a rising, ascending market, whereas on a declining market, you have lower lows and lower highs where you get drops with a spike, drop with a spike, and that is your down market. So right now we are reversing the trend, and until we get past that 65,000, it's not really bull market on until you're back then in terms of confirmation of a full-on bull market to all-time highs and getting towards that 100,000 by the end of the year that a lot of people seem to think that we're going to get to. And by all indications of what we're looking at here, it looks like we're on our way back to 65 and beyond, and we might just hit that 100,000 or more by the end of the year. This rebound went from 29,000 to a peak of about 48. I think we had some wicks up to 48, 49,000 in a very short period of time, basically since the 21st of July to where we sit today, the 15th of August, 21st of July to the 15th of August. So that has been almost a month of this uptrend that we're in right now. And if you look at the weekly is looking good. Each week we've been straight up. So if we can get another close on an uptrend this week, then that's looking really good in terms of trend reversal and getting back to the bull market. And of course, like everybody's putting out there, you have to always be ready and prepared for a bull trap, right? So what is Bitcoin doing? It's in price discovery, and it has been ever since that first initial bottoming out from the initial sell-off to that $30,000 bottom. It bounced back up and it kind of ranged in that 37 to 40,000 range. Then it stepped down a little bit, ranged in that 34 to 39,000 range, basically 30 to 40,000 with different levels. At some points it's 35 to 40, then it dropped down to where it was at 30 to 35, 36 level, and then it kind of eased its way down to that low of 28, 29,000, which a lot of analysts are calling for a macro low. There are still some that feel like it can go below that. We definitely know that in a black swan event, like the coronavirus times, it can definitely get below that last low as we saw here when it dumped in coronavirus. So barring a black swan event, it seems like that 29,000, 28, 29,000 is your macro low. We could just call it 30. So in terms of confirmation, if you do get some sort of a major pullback from a bull trap scenario, which, this could be a mini bull trap. These can be mini bull traps trying to trap you on the wrong side of the trade. The next levels to look at going down will be 40,000. As long as we're above 40,000, and more particularly above 42, this trend could continue to stay moving upward. But if it starts getting below 42 and more particularly below 40, then there could be some downside. And ultimately, the major bottom is at 30,000. If you break that, all bets are off. But it doesn't look like there's any indications that that could happen. But you got to expect some pullbacks along the way as you continue to the upside. Be prepared for that with stop losses, because what we're doing right now is that price discovery range. The institutions are trying to determine where is the price sustainable, what is the appetite for these higher prices, and what does that action look like? And that's kind of what we're doing. We're in price discovery mode. As you can see here, we range, the institutions spike it up, you range. It kind of didn't work out here, so it was dropped back down to bring volume back into the market, and it kind of ranges in that. These ranges are a little tighter now, 46 to 47,000. So $2,000 ranges, testing demand, testing price action, trying to figure out price discovery. So that's kind of the mode we're in there now. So the key levels to watch are 50,000 to the upside, 42,000 to the downside. And we are now, instead of a 30 to 40,000 range, we are in the 42 to 50,000 range. Based on where things have been wicking. We haven't visited 42 in a while. Really 45 to 50,000 is kind of the range we're in now. And you got to be on guard all the way up to about 50 to 52,000. Once you get above that, then you can pretty much, in closing above it and moving upwards, you can pretty much count on bull market back on, full on bull market back on. I know a lot of people think we're still in the bull market, bull, bear, whatever. We've been in a downtrend. Now we're reversing it. We're back within an uptrend. So those signs for reaching back to that 65,000 levels looking pretty good. And one thing that's interesting, so there's a lot of uncertainty around the regulatory environment and what the IRS is going to do. And there's reports out that the IRS has said they're going to ignore how the bill defines brokers. And we talked about this last week in terms of when legislation's passed that has a bunch of unintended consequences. They're going to generally revisit that, and they're going to put out new guidance on those regulations. And that's exactly what this says. The U.S. Treasury Department is preparing to offer an olive branch to crypto developers, miners, and hardware firms spooked by the bipartisan infrastructure bill and tax reporting requirements. The price of Bitcoin obviously jumped on that initial news. So this was a Bloomberg report that said the guidance would attempt to soothe the crypto industry's biggest fear, that the Senate's slapdash effort to tax any service effectuating transfers of digital assets on behalf of other persons could blow the nascent industry to smithereens. And again, it's just a tax. So they do not want to end the industry. They know that this is the future. There's a lot of potential. They know they're not going to stop it. What they want to do is they want to tax it. Number one, they want their fair share. Or their unfair share, however you look at it. The government does not want an industry to exist where they do not have the ability to take a percentage of that. So that's really at the bottom line, is they want to tax it. The SEC wants to regulate the areas that they are affected with in terms of securities. And their job really is to protect the public and as at large, to protect the general public. So, they have a vested interest there, and they want to get their say. And all the other departments that can be affected, they all want to have their say in regulation. But like I said last week, when it comes to things like this, basically, just keep in mind that whenever legislation's passed in a new industry, especially, and there's a lot of unintended consequences, or a new tax policy, there's going to be unintended consequences. There's going to be little landmines, roadblocks, speed bumps, things like that. So they will always go back and provide further guidance to clarify ambiguous content, rulings, regulations, and rules. And then in the case that you have a unique situation, so if there's anybody watching or listening that is in the business, and maybe you're a minor or you're a developer or something like that, and you're not certain, you can always get what's called a private ruling letter. And we'll go back to that again, and we'll look at something here in terms of what you can do. And this is something that's very common, very typical in the industry. It's called a private ruling letter. That is very common with the IRS. So what is a private ruling letter? So it's a written decision by the Internal Revenue Service that is sent in response to a taxpayer's request for guidance on unusual circumstances or complex questions about specific tax situations. For certain transactions involving large amounts of money, the tax law may be unclear. The purpose of the private letter ruling is to remove any uncertainty and to advise the taxpayer, usually a business, regarding the tax treatment they can expect from the IRS, given the circumstances specified by their ruling. A private letter ruling can also help a taxpayer confirm whether or not a potential action will result in a tax violation. So private letter rulings are something that people can get to get further clarification and guidance on their specific situation. Any individual can apply for that. It's not expensive. It does help if you have a tax attorney, but you can do it on your own. You can go to the IRS website and get further clarification and guidance if you're in the United States and you're concerned about your business and how this could ultimately affect it. But again, they're going to clarify a lot of things, provide more guidance as we go along, and we get more and closer to this legislation getting passed. And then once it gets passed and all of the little issues are found, once it's passed, then they will make exceptions. They'll make new rulings. They'll provide further guidance. And the last thing they want to do is hurt an industry that's going to provide jobs and provide tax revenue and make them look good. So you can guarantee that when they see the amount of tax revenue that something like this can create, the amount of jobs that an industry like this can create, they're all going to want to hitch a ride on that wagon. So fear not. Things will get better as we roll through. Anytime you have a new industry and the government wants to get involved, there's going to be hiccups along the way. But as you can see, they are not going to try to end the industry or do anything that's going to potentially harm or threaten the future of the industry and the revenues that they can collect from a tax standpoint. So with that, I will sign off, and I will see you on the next video.